Good afternoon. George Cafaligos for HFT Bonds. What do you say? The move yesterday, the bonds and notes closed on their highs. No follow through overnight. We walked in this morning, I think early in the New York session. It was an early attempt at a rally that couldn't take out those highs from yesterday. And then we saw the jobless claims data and the market was off to the races on the downside at that point. I really never was able to recover. Going into the pit closes, the bonds actually took out their old lows at 132.02 by a couple ticks and then reversed a little bit, but not convincingly. We haven't had, I want to say, a higher high on a 30-minute chart all day today. So the market's very negative here. Tomorrow's non-farm payroll data. I'm very mistrustful of the market at this point. I want to see what that data looks like. We've seen, like yesterday, the markets closed on their highs, put up bull reversals, and didn't follow through. And now we've got this very negative-looking bear reversal. I wouldn't be surprised to see a weaker than expected non-farm payroll number, but I'm not going to bet on that at this point. There'll be plenty of opportunity to trade after the number, get that out of the way, and then see what happens. Levels to keep in mind. Obviously, the bonds took out the old lows at 132.02, but then recovered it. Now that's going to be an important level in terms of trade below there. The next big objective on the downside is a fib retracement of the old rally from like 117 up to 152 at 128 and 3/4. 128.25 I think is the number. So that'll be an objective if we do start trading consistently below this 132.02 level. And then look at the 10-year. The 10-year is going to be important because the 10-year did not take out its old lows. It did not even take out the lows from late June at 125 even plus yet. Today's low was 125.11 plus, I think. So I'm going to watch the 10-year levels. The lows from late June at 125 even plus are going to be kind of short-term important, but the big lows down at 124.11 from the July unemployment number are going to be crucial. And keep in mind what happened in July on the data. The market spiked lower and then reversed higher. Now at that point we had seen a lot of shorts in the market. We had seen going into that July non-farm payroll number, huge volume in the puts, in the treasury options, and we have not seen that this time. The July options expired last Friday, and I thought for sure, the August options expired last Friday, sorry. And then after that we did not see a lot of new put buying. So we're kind of dealing with a bit of a blank slate right now. We don't have the massive short position in the market, I think, that would prompt that kind of reversal like we saw in July. So I think if the market does start out one way tomorrow, it will generally follow through in that direction. But let's see what the number looks like. Keep those 10-year levels in mind. See what happens at those big old lows at 125 even plus and 124.11 plus, and then we'll take it from there. No axe to grind going into the number. I'm obviously looking at the downside after another failed rally yesterday, but I'm not going to have a position going into the number. We'll play it afterwards. Have a great night. Hope to see you guys in the webinar. Starts in about an hour. Come and join us. You can get the link at hamzyanalytics.com. If you don't have it yet, come on in and join us. A lot of good stuff there from Fari on the equities, Ashraf Alaidi on the FX markets, and me on the bonds and notes. Have a great night.